let's try and understand what the market view is. We have with us in the studio Mr. Mehul Bhatt, the founder and chief investment officer at OysterRock Capital, joining us. Hi Mehul, thank you so much for making time speaking with us. What's the market view right now? Because while it's not a runaway rally that we are witnessing, we are quite a bit off from the kind of March lows that we had seen. So a solid recovery in the last 3-4 months.
Yeah. So I think if you take an outside-in view of India, it's never been this good for the last 20-25 years. The macro situation and the way India is being recognized in the world is unprecedented. Manufacturing, which was in the background, is now coming to the foreground. You're seeing, every morning you open a newspaper, you're seeing, full-page Apple ads and many of these, and these are being made in India. So I think manufacturing is now coming to the fore, and that's a very important piece in the puzzle. Rains have been good, but I think markets are in a state of predicament. So they are neither insanely expensive or they are not cheap. And I think going into election season, we think that there will be some opportunities for people like us who are more value conscious when we are buying stocks. That it will give us opportunities to actually buy stuff at more reasonable valuations.
But what would it be? Would it be more of the same, bunch of financials, manufacturing as the large theme, utilities?
So I think before that, if you see the rise in the last few months has been quite democratic in the sense that a lot of stocks have gone up, a lot of sectors have done well, and it's not like 2007 where infra and cap goods and those stocks did very well, or 2000 where tech did well. So to that extent, I think it's a good situation to be in for us. Having said that, there are pockets of overvaluation, and if let's say if you were to buy now, then investors will have to temper their return expectations, because at these valuations, I think that's the only negative, if I may use the term. But otherwise, I think companies are doing well. So if you look at for example the corporate mood, if you go back to 2019, it's 180 degrees opposite now. Of course, yeah. Balance sheets are much better. They've cut costs significantly in the last 7-8 years. Growth, capacity utilizations are at interesting levels. So I think if you put all that together, so if you combine the whole macro and the micro story, it looks very good. The only thing that is a little deterrent right now is valuations. Yeah. And if you look at if you were to break it up by sector, then like financials look, if you asked people like us who are not going to buy very expensive names, etc., then I think that's the first port of call. But a lot of them are cheap. I don't think the growth rates that we saw in the first 9 months of last year will be repeated this year, probably. Yeah. But the valuations still remain attractive, but most of them are overowned right now. So, sure. And I think that probably caps some of the upside. Pharmaceuticals look interesting, and we've seen some recovery in earnings and in stock prices. But early days, the US pricing seems to be getting better, and I think that is what is showing up in many of these names.
Sure. Yeah.
If you look at autos, still look interesting. Auto ancillaries look pretty interesting. I think cap goods, engineering, while growth is phenomenal and a lot of these guys are doing very well, we have to be cautious in terms of valuation. So where the numbers don't come, the market's been quite discerning. So sure. As soon as we've seen good numbers, stocks are up 15 and 20%, and it's the opposite when the numbers are not interesting. So for us, we are looking at opportunities. If you bucket it like in 3 parts like we do, which is value, so you don't see a lot of very cheap names unless they are cheap for a reason, and something's changing, only then it's worth hunting in that zone. But the special sits as we define them, which is wherever there's a change. So there are a lot of interesting opportunities where companies are going from commodity to value added, or they're going from B2B to B2C, or in some instances there are demergers. These are good hunt zones for guys like us. and the long-term compounders have remained very expensive. So I think there was a momentum trade in quality in the last 4-5 years.
Yeah.
And what was 65 times went to 100, 110 times, and it's all now back to those levels. But I mean, how do you make money buying at those prices in general?
Yeah.
So I mean, there will be one of opportunities in, especially in some of the multinationals, etc., where they will do well for different reasons. But I think those are not pockets where we will hunt unless they are going through a troubled time, or something is amiss, which is what makes them unattractive to the market, and potentially interesting for us.
So highlight some of these special situation names where you would value hunt.
So I mean, I can't talk about specific names, but companies where we've seen management changes, or we've seen results being below expectations. These are places where markets have been quite brutal, and when they are trading at low teens or low double-digit numbers, these are places where I think there is an interesting hunt zone. So in the IT sector, for example, whether you take core IT, so some of the mid caps have done really well, and because they have niches in certain areas which have done very well. So or IT distribution businesses where some changes have led to, so like a lot of this whole work from home, moving back to office has created growth rates which are lower than management anticipation or investor anticipation. So I think we've seen some of those prices become interesting now. So those are places where incrementally but cautiously we are buying with new money.
Right. Okay, those are some of the ideas coming in. But Mehul, just to take that point forward, where is it that you want to have water? Please go ahead.
Yeah, sure.
I'm just going to mark a couple of these buzzing stocks. Indiabulls Housing, Escorts, Piramal Enterprises, Tata Motors, by the way, has now climbed up a good 2.25% as we speak. It's sitting at the peak of the day, 621 thereabouts is where that stock is. But since we're talking about buzzers, where is it that you find froth or overvalued pockets?
So I think, like I said, in many of these engineering cat goods names, valuations are ahead of what earnings would justify. So basically what the markets are telling us is that they're expecting an earnings rally in India for next many years, and if you buy at these valuations, obviously you have a lower expected return if all goes even as per expectation. So I think these are times when the worst mistakes are made in the best times, and that's something that we worry about every morning when we wake up, that are we going down the quality curve, are we buying names which in a normal environment we wouldn't be buying, but today we are succumbing to buying those because of valuations only. And I think those are things we need to be cautious about, because from these prices, unless your thesis plays out as you anticipate, it's going to be hard to make money. And if you see the situation today, small caps are more expensive than mid caps, and mid caps are more expensive than large caps in general.
Yeah.
And that makes it harder.
True. Yeah, it's definitely hard. It's not as easy as it was 3 months ago, because there's a lot of froth in the market as well, and there's a lot of catch up that has happened. So thank you, Mehul, for joining us and making time. But